This is the dream solution for financial goals. In this episode, I am going to address the best financial tool. IUL is like a financial Swiss Army knife, and you're going to see why and get blown away, I assure you. So put on your seatbelt. Hi, I'm Doug Andrew, and I've been a financial strategist and a retirement planning specialist for more than 4.5 decades. And by far, my favorite financial vehicle for all kinds of financial goals is what I call the Laser Fund. What is the Laser Fund? By the way, LASER is an acronym that stands for Liquid Assets Safely Earning Returns. And if you stay with me to the end of this episode, I will show you how you can claim your free copy of my most recent 300-page best-selling book titled The Laser Fund: How to Diversify and Create the Foundation for a Tax-Free Retirement. But the Laser Fund is more than just a retirement planning vehicle. Oftentimes, I will say it's the dream solution to many, many financial goals, and I compare it to a Swiss Army knife. And if you're familiar with a Swiss Army knife, there's all kinds of tools that come out. I have one that has like 25 tools. Here I have 10. So I'm going to share with you why Indexed Universal Life. What's that? This is an instrument that, when it's structured correctly and funded properly, will allow you to accumulate your money tax-free, then be able to access your money tax-free, and then when you ultimately die, anything you leave behind blossoms in value and transfers income tax-free. Nothing else in the Internal Revenue Code does that. Municipal bonds don't do that. Roth IRAs and 401ks don't do that. So it's my preferred tool, but it has so many different uses, and you can read about these in the book that I'm going to gift you. So let me go through some of the different ways people use this tool for all kinds of goals because of its tax benefits. You're able to participate when the market goes up. When the market goes down, you don't lose. You link your returns to the things that inflate, so you're immune from inflation, but it's tax-free. So it doesn't matter what taxes go to. This is totally tax-free, and it's been grandfathered in the Internal Revenue Code as a sacred tax-free cash cow for over a century. So let me share with you how this can be used for all kinds of goals. So in my most recent book that I want to gift you, I talk about the key elements of a prudent investment: liquidity, safety, predictable rates of return, and I prefer tax advantages. The reason why I love the Laser Fund is because it passes those tests with flying colors. In fact, on the front of the book here, you'll see 4 pillars. And this one stands for liquidity. That's the L. S is safety. R is rate of return. And T is tax benefits. And in this book, I have a scoring system that you can score any investment, place where you put money. And you can score it on a scale of 1 to 10 based upon liquidity, the ability to access your money when you need it. 10 being, a perfect score. Safety, 1 to 10. Rate of return, and also tax benefits. Do you know that most places where people put money, IRAs and 401ks, mutual funds, banks, credit unions, all kinds of places where people put money, annuities and what have you, they only score maybe 18 to 22 possible points out of 40. See, if you got a perfect score, 10, 10, 10, 10, that would be 40. Now, the Laser Fund doesn't score a perfect 40. Nothing does. But it scores higher than any other investment by far, generally between 33 and 35 points out of 40. It blows the others out of the water. But here's what it can do for you. When you begin to understand how to accumulate, access, and transfer your money tax-free, and earn predictable rates of return like I have for the last 4.5 decades, averaging 8.2%, just using the strategy of indexing. But when you rebalance, which is explained in the book, you can tweak the rates of return up to 9 and 10%. You can earn 10, netting 9. What's the 1%? It's not tax. because it's tax-free. It's the actual cost of the insurance that the IRS says has to be there, or it wouldn't be tax-free, but it's not really a cost. At the end of the day, it's a benefit. It's what allows any money in there when you die to blossom, increase in value. If I died right now at age 68 and a half, every million in my portfolio of laser funds would blossom to about 2.5 million and transfer tax-free. Nothing else does that. And people say, how much does that cost? Well, nothing's free, but it doesn't cost me anything. It's coming along for the ride. It's being paid for with a minuscule portion of interest that would otherwise go out the window in unnecessary tax if I followed the herd and put my money in traditional IRAs and 401ks. So when you begin to understand how the laser fund is this superior vehicle, a dream solution for all kinds of goals, most people think it's for retirement. Yep. Well, hello, it's life insurance. So it will provide a death benefit, totally income tax free, under Section 101A of the Internal Revenue Code. But there's two other sections of the code that apply to max funded life insurance contracts. Now, when I say max funded, what you're doing is you're using the life insurance contract for living benefits more than just the death benefit. You're trying to take the least amount of insurance the IRS will let you get away with, and you're putting in the most money the IRS allows as fast as the IRS allows, and that's what turns it into a tax-free cash cow. But when you ultimately die, yeah, you get a tax-free death benefit, but people use it for living benefits for retirement planning. And you can learn, it knocks the socks off of IRAs and 401ks. You'll often get double, triple, even quadruple the net spendable income out of the laser fund than you do with money in IRAs or 401ks in the market. What other benefits or what other uses can you use? People say, well, golly, can I put money in there other than money I had in IRAs or 401ks? I go, yes. Non-performing assets or low-performing assets like money in banks and credit unions earning a pathetic 1%. Why don't you put your money where the bank is putting your money? When you put it there, where do they put 30 to 40% of your money? Into the multi-trillion-dollar insurance industry. You can bypass the middleman. Why do they do that? They pay you 1%. They put it into insurance companies and earn 5% without even linking to an index. How much more is 5% than 1? 5 times. Okay, every million, they make 50,000 and they only have to pay you 10,000, 1% in the bank. So you can increase the liquidity, the safety, because insurance companies, the multi-trillion-dollar insurance industry is the backbone of America and the backbone of the world. Most insurance companies, and the ones I put my money in, are ranked AAA. That is 6 notches higher than BBB, which is what most banks are rated. So you can increase the liquidity, safety, and rate of return. Well, once you understand this, you can use the laser fund for more than just retirement planning and death benefit. What else? So are you beginning to understand why I compare this to like a financial Swiss Army knife? Let me share with you the other uses. But before doing so, if this is beginning to resonate with you, stay with me to the end because I want to gift you a copy of my most recent best-selling book. But click like, okay? Share this video with other people that you think would really appreciate this information. Post a comment, but subscribe. I would love for you to get empowered with additional education because I post a new educational YouTube video almost daily answering a specific financial question, and I do it in depth because this is about you. This isn't about me, about your brighter future. And I'm passionate about empowering you with information and teaching you true financial principles, and then you can govern yourself. Who better to look out for your own best interest than you? You can become your own fiduciary. So let's go into some of the other uses for the laser fund. And these are explained actually with stories in my book. My book is divided into actually 2 books. One is the left brain side that talks about all the tax laws and why it's tax-free and why it's a sacred cow, charts and graphs and what have you. But you flip the book over and the other side is about 100 pages, 12 chapters with 62 actual client stories. And it explains the different uses for the laser fund like this financial Swiss Army knife. So you will read 4 or 5 stories of how people have used the Laser Fund for college savings or college funding. It knocks the socks off of a 529 college savings plan. It has those benefits and a whole bunch more, and it's self-completing. If I'm saving for my children or grandchildren's college and I happen to die, this will blossom and fund their college in one fell swoop. There's not a 529 plan that has that death benefit that will do that. But it accumulates tax-free and I can access it tax-free, and I don't have to use it for college. A 529 plan, if you don't use it for college education, you lose the tax benefits. Why do you want to paint yourself into that corner? Things may change. Maybe your child gets a scholarship and doesn't need that fund and would rather use it to start a new business once they graduate. Are you getting it? How about this? A working capital account. Many business owners will use the Laser Fund as their working capital. That's what I do. So for example, I have a friend, a client. He develops real estate. His niche is he finds distressed rental properties, big apartment complexes that are a little bit run down, and the owner, the landlord, just wants out. They're tired of being a landlord. And so what he does is he buys them to help them be able to liquidate and get the money. Then he fixes them up and then turns around and sells them. Sort of like buying and flipping houses, only he does that with major apartment complexes. So sometimes you'll see a big 76-unit apartment complex, and maybe he can pick it up for $30 million in the San Francisco Bay Area. And so he needs $1 million of earnest money within 48 hours. Where does he keep that working capital? In his Laser Fund. He simply calls up and says, I need $1 million. I say, how soon? He goes, in a day or two. Oh, great. So I email him a form. He fills it out. It's 1 page. And it says, do you want to withdraw $1 million out of your Laser Fund, your insurance contract, or do you want to borrow $1 million? Which one do you think he checks? Borrow. See, if he withdrew it, he would not be earning interest. But since he has $1 million in there, why take it out if it's earning interest? Because he's earning usually 8, 9, 10%. So that's his collateral. The insurance company keeps crediting him 8, 10%, some years 25%. And so that's the collateral, and the insurance company will loan him $1 million instantly. He doesn't have to qualify. They're loaning him the equivalent of his money. But by doing that, the insurance company says, well, okay, we'll charge you 4% or 5%. Why would you do that? Why would you borrow your money at 4 or 5% when you can withdraw it for nothing? Because he understands how money works. He borrows it out at 5%. $1 million, that's $50,000. Does he have to pay that? No. It's automatically deducted from the 10% he earns that year. He borrows $1 million out of his insurance policy, and he earns 10% that year. That's $100,000. They deduct $50,000 for the interest, and he netted 5% tax-free on his $1 million while he was using the $1 million in his business to make money. Do you know in 2017, he borrowed $1 million at 5% and earned 25% that year? So he made $250,000, $50,000 of that paid for that interest on the loan, and he netted 20% or $200,000 tax-free on his $1 million in his policy while he was using that $1 million in his business to make money. Does that make sense? It's working capital. What are some other benefits? Watch. So you can use it for all kinds of other financial goals. That's why I compare it to a financial Swiss Army knife. What are some of the other uses? And then I'll show you how you can learn about these and read actual stories. So here we go. When you use the Laser Fund to accumulate your money tax-free, and you can access it tax-free with an electronic funds transfer or phone call, you can use it for real estate management. So see, many people who invest in real estate, they will finance their properties, and they'll borrow money or mortgages, let's say at 4.5% deductible interest. So that's a net cost of 3%. So on $1 million mortgage, they don't pay $45,000 out of their pocket. That's the interest they're paying, but they get $15,000 back in a 33% bracket because of the tax deduction. So if you're a real estate investor and you mortgage properties and you borrow money at 4.5% interest, it's tax deductible if you do it the right way. So every million you pay $45,000 a year in interest, but you get to deduct that. In a 33% tax bracket, your net cost is only $30,000 or 3%. If they borrow money out of their insurance contract, they are borrowing at 3% and they keep earning 9%. So this is where a lot of savvy real estate investors will keep their working capital also for their real estate investments. Is that making sense? They're making 300% more than the cost of the mortgage in addition to the rental income. What about some other uses here? Well, we have emergency funds. I would rather have my money in an insurance contract where I can access money. It may not be convenient like a drive-up window, but in this day and age, I can access it electronically in 24 hours if I need to. So I use it for an emergency fund instead of thinking I have to settle for less than 1% interest at the bank. How about lump sum capital transfer? This is where people get an inheritance or a settlement from maybe a car accident, or they come across a windfall and they sell something. This is where you take that lump sum and put it into the laser fund to protect it and earn tax-free rates of return that are immune from, of course, taxes and inflation and market volatility. We also have estate planning, because this allows you to be able to preserve the estate, but when you die, it blossoms and transfers tax-free, and you can structure it to not only eliminate the income tax, but avoid estate tax by using irrevocable life insurance trusts. We have pension maximization, where retiring school teachers can choose the no survivor benefit option that gives them more income, and you take the portion they were going to reduce your pension by to make sure your spouse keeps getting it if you die. You put that into a laser fund, and you can name the beneficiary if your spouse predeceases you. If you choose the pension income with a no survivor benefit or even a survivor benefit, you cannot change beneficiaries. So this is way better, and it creates more income for people that are retiring, and also just simple tax reduction. So this is what I would recommend you do. Read and study this book. So I want to gift you a free copy. It retails for $20, but if you go to laserfund.com, laserfund.com, and you can claim your free copy, but here's a quicker way. Just click on the link below, and you contribute a nominal amount towards the shipping and handling. I'll cover the rest of that cost, and I'll pay for the book. And then I'll send it out to you, and you can begin to learn why this is a financial Swiss Army knife, the dream solution. And if you want to read about 62 stories about how it fulfills all of these goals, you flip it over, and this contains 100 pages with those 62 chicken soup for the financial soul stories.